Welcome everyone to the FinTech Olympiad, brought to you jointly by City University of Hong Kong, of course, and Hong Kong Digital Assets Society. Just give you a little background of what the society does and who we are. We're basically an NGO that wants to help promote the industry in Hong Kong to the world, actually, and try to bring up the spirit and all the infrastructure and try to bring up the community of blockchain, Web3, and digital assets, of course, in Hong Kong, because we do believe, everyone in the organization believes that Hong Kong is a great place for this industry, and we have readily available talents, including all of you guys sitting at the audience watching us here to help really just help Hong Kong out to be competitive in the world, in this industry. So we're so happy to organize this event, and today I'd like to really welcome our honored guest, Mr. Dick Low. Let me give you a little background introduction to you guys about Dick. He's a very experienced financial professional who had more than 20 years of experience, spans across investment banks, portfolio management. He was the head of Exotics, and also, of course, the TDX strategy, which he was a co-founder and CEO, which is a FinTech company, as most of you have done research. And TDX strategy, in short, is an institutional grade derivatives, crypto derivative platform. And for more details, I'll just let Dick introduce the platform to you and his journey to this entrepreneurship to you. And it's going to be really interesting and very engaging. So I hope you guys will really listen up, and hopefully you prepare some questions for him, because he's ready for anything. He's experienced with all these journeys he's gone through. So without further ado, I'd like to pass the space to Dick. Thank you.
Thank you for that intro. Very nice. Thanks everyone for coming. I'm really glad to be here. As I mentioned, my name is Dick Low. You can call me Dickie, and I'm the founder and CEO of TDX Strategies. I'll explain a little bit about what we do in a moment. But today, the main purpose of today's sharing, I want to talk about my journey as a founder in a FinTech startup. I think a lot of us at various points of our lives, whether very, very early on while you're studying, or you've been in the same job for a while, you always start thinking about, I want to be my own boss. Do I want to own my own business? It's very appealing. It's very glamorous. I want to control my own destiny. I want to run my own business. But it's not as glamorous as it sounds. So I'm here to give you the real lowdown of what it's like to run a startup, and especially a FinTech startup. All the ups and downs, so you know what it's really like, and hopefully that prepares you better as you go down the path of entrepreneurship, either now or later on. So very quick background. I'll do some introductions about my own background, and also spend about 2 minutes talking about TDX strategies. But I think what's more interesting is sharing the journey of how we got here. How did TDX strategies start? What challenges did we face along the way? And how did we end up where we are now? And what challenges are we facing going forward? I'll very lightly touch on crypto as an asset class, given that that's our business, and we're in the business of crypto derivatives and investments. So I'd like to share my passion for crypto and my belief that crypto is a generational opportunity in terms of investment. There will be time at the end for Q&A, but I encourage you to stop me at any time and make it more interactive and ask me questions. If I talk nonstop for 40 minutes, I'll probably lose you guys by about the 5th minute. So, very quick background. I know a lot of people tell me I look very, very young, and thank you for that. But it has been more than 20 years since I graduated from university. So I've been trading in financial markets for more than 20 years. Can't really hear you. You can speak up. Okay. Yeah, so I've been trading financial markets for more than 21 years. I started my career with Deutsche Bank in Sydney as an options trader. I moved to Hong Kong in 2005 to join the exotics trading business here in Hong Kong. at the peak of our business, we were generating approximately $100 million of revenue per year. And then subsequently went to Daiwa Capital Markets, the second largest securities house in Japan, and helped them build their vol trading desk and also their exotics trading business. And about 4 years ago, I started TDX Strategies. And what we do, TDX is a institutional grade crypto derivatives platform. Now, a lot of people consider crypto to be a speculative asset, a risky asset from which you can make a lot of money very, very quickly or lose a lot of money very, very quickly. Who here has invested in crypto? Yes, yes. A lot of us have. And it's very, very, very volatile. It's very exciting. But my personal belief is crypto is a long-term asset with a potential to generate generational life-changing wealth over the long term. So we're not here to speculate, and our mission is to invest in crypto the traditional way by offering a range of investment banking and private banking services that help our clients to build, grow, and manage their digital asset wealth. We're not here to gamble. We're not here to make 100 times in a week or lose it all. We're here to build our wealth over a long period of time. And my team have all come from investment banking backgrounds. We have decades of experience in trading, derivatives, technology. And we're backed by well-known investors in both the blockchain space and also traditional markets. So a very quick look at our business. As I said, I founded the business 4 years ago. We're backed by a Hong Kong family office, who is also the majority shareholder of Forbes. In 2020, we completed a strategic funding round that valued the business at $12 million. In 2021, our business turnover hit $1 billion US, and the business turned cash flow positive in the second year of business. Okay. And in the same year, we completed our Series A funding round, which valued the business at $40 million. Last year, our business exceeded $2 billion in terms of cumulative business turnover, which is a pretty good achievement considering the market turbulence that we experienced in crypto last year. And right now, I have 16 staff in 4 global locations, here in Hong Kong, in China, Singapore, and also in London. So looking at this timeline, it looks like it's very straightforward, smooth sailing. Start the business, get funding, make money, get more funding, grow the business. But in actual fact, how do we get to this point? It's actually not smooth sailing. For most startups and for most fintech startups, it's a very long and winding path before you get to a scalable business. And a lot of startups fail. So I want to go through some of the experience that I went through and a lot of challenges I had running TDX. So a lot of times when you start a business, it's all about timing, being at the right place at the right time. There's a lot of it's fate, be in the right place, identify an opportunity at the best possible time. So when I started the business 4 years ago, I was looking at crypto by coincidence. I met the family office owner. He invests in pretty much everything. He invests in finance, technology, sporting teams, media. He's the owner of Forbes, but he didn't have an investment in crypto. So we decided together, let's have a look at the market and see if there's a business opportunity. So as with any startups, the key is, are there any pain points? And we identified a lot of pain points in crypto. We know that it's an emerging asset class that everyone's interested in, but it's very difficult to access the market for the average typical investor. It's a lot of concerns about keeping your assets safe, how to keep your assets secure. And there's a lack of sophisticated products that help clients to access the crypto market, apart from just buying and selling spot or buying and selling spot with leverage. So we decided that we're going to solve these pain points and we're going to fill the market gap when it comes to sophisticated wealth management and investment solutions. What's the competitive landscape like? Is there anyone doing what you're planning to do? And very quickly, we realized that we don't have any direct competitors. No one is doing what we want to do. No one is focused on crypto from the perspective of derivatives, institutional grade derivatives, structured products, smarter ways to gain access, smarter ways to manage your risk, improve your risk return profile. Nobody was doing it. Of course, there's a lot of indirect competition. Any platforms that offer you access to crypto, whether it's by buying spot, buying and selling spot, buying and selling futures, is in a way an indirect competitor, but no one else was doing what we were doing. And how unique is your product? And more importantly, if you have a good product, is it easy for your competitor to just replicate and copy paste? So in our business, exotics, structured products, structured derivatives, financial solutions on crypto, it's complicated. It requires a lot of technology, infrastructure, complex pricing models. You need experienced staff who knows how to manage the risk of these products. So whilst it is possible for someone to set up their own business and do exactly the same thing, the barriers are relatively high. And most importantly, it doesn't matter how good your product is, how big is your potential market. So who are your target clients, or how big is your total addressable market? So I always speak to a lot of entrepreneurs about their products. They think of something really exciting and very unique, very innovative, but does it have a market? If the market is too small, you can't make money. It's not commercial. And for us, our target market is everyone who invests in any asset class. Any investors in equities, bonds, real estate, alternative assets, crypto. These are all our potential clients. So our potential total addressable market is huge. Once you figured out what you want to do, how are you going to bring the product to the market? Execution, how are you going to execute your plan? So for us, we have this great idea, but there's a lot of moving pieces that needs to come together for the business to work. As I mentioned, we need infrastructure, technology. We need to build risk management systems, pricing libraries that allow us to manage risk. We need to build a client UI that allows client to trade and settle. So there are lots of things to do before we can even bring the product to the market. So your finances are extremely important. How are you going to finance the business until you start making money, until your product is ready to be launched? Without a clear path to profitability, the business will not survive. And without a clear plan to making money, it's very difficult to find an investor who will support your business. So detailed costing. What's your budget? Lots of recurring costs, the cost of paying your staff, your founding team members, rent, a lot of one-off costs in setting up the business. Know your runway. Before you're making money, how much cash are you burning every month? How much cash do you have? How many months do you have left until you run out of money? And make sure you raise capital or cut costs well before you run out of cash. You have 6 months of cash, 6 months of runway until you run out of cash. You expect your product to hit the market in 6 months to start making money. Things do go wrong. Things get delayed. So make sure you raise money, raise capital, or cut costs before you get to the stage when you run out of cash. And it's extremely important as a startup with limited financial resources that you minimize your costs in the early days so you can stretch out your runway. So at TDX, we started the business in early 2019. We spent a good part of the first 12 months just building systems, technology, building products, going through legal, term sheets, documentation, making sure what we're doing is compliant and not breaking any laws, and setting up the client interface. There was no revenue in the first year. So how do we save costs? we didn't pay ourselves. So we all took pay cuts. The senior management, my co-founders we did not pay ourselves any salary until we started making money. So these are the sacrifices that you may have to make as the founder if you believe in the business. And assume the worst. Assume that things will be delayed. If your tech team tells you that they'll deliver a project in 6 weeks, expect 10 weeks, 12 weeks. If your legal says they'll review your documentation in 2 weeks, expect 2 months. So expect delays and don't count on everything to be on time. Also, how do you make money? You have a product, an idea, a concept. How does it generate revenue? Is it a SaaS model where you get subscription fees every month? How do you make money? We make money by selling products to clients, and we take a spread. We go out to the market, we hedge, we try to remove all the risks associated with the product, and we take a profit margin. That's our revenue model. And how do you measure key milestones? How do you know you're making progress towards revenue generation, towards profitability? Infrastructure rollout, key milestones for your technology, systems, soft launch of your product, and who are your stage 1 clients? Typically, these are your friendly clients, your own network, people who will support you and help you validate your business and validate your product. And if you're in a position to raise money, if you're in a fortunate position to raise money, take more money, raise more capital if you can, because things do become difficult. You will find a rainy day when you start running out of cash. So in the crypto business, it was very easy to raise money in 2020. It was very easy to raise money for most of 2021. We raised in 2021. It wasn't easy. It took us 6 to 9 months to close our round. But by 2022, if you haven't raised and your runways is running short, you're in deep trouble. Crypto winter, market downturn. Markets are cyclical. Economies are cyclical. If you missed your chance and you didn't raise enough, now it's very difficult to raise capital. So if people want to give you money, don't say no. The right team. It sounds obvious. You need to have the right team to make it all work. You need to have a really good balance between skills and experience. And they'll come back to this again and again. You have limited resources as a startup, so your team is going to be very small, or likely to be small on day one. So you need to make sure that everybody is adding value, making a unique contribution. You can't be carrying anybody. What are the key skills to make your business work? And that needs to be balanced across all the different functions of running a startup. If you're a technology company, you're likely to be tech heavy, but you still need to have sales. You need people to sell your product. You need operations. You need finance. Some people might need to wear multiple hats. When I started the business, I was doing HR, operations, trading, sales, everything. But you need the right set of skills. You need to have a balance across all functions. You can't all be technology. You can't all be programmers. You still need the other parts of the business. And they need to be the right people. Startup is a different business to working at a bank. Resources are limited. You have to do a lot of work, hours are long. It's not always fun. So people who are not right for the business, who don't have the right skills, they may leave the business, or you may need to make decisions on whether or not they should be part of the business. So at TDX, I had 6 founding members. 5 out of 6 are no longer with us. So I'm the only one left. And part of that is the mindset. It's not just the skills that you need to run a successful business. It's the mindset. Startup mindset is very different. Hungry, you need to be very hungry, very driven, very proactive. It is completely different from working in a big corporate or big investment bank or big technology company. If you work at Apple, you don't need to sell Apple. Your iPhone, your iPads will sell themselves. You work for TDX, no one knows who on earth is TDX. How are we going to sell TDX? You have to be proactive, driven. You need to go out there, see people and sell the product. People don't come up to show up and say, I want to buy TDX products. So I had a similar experience. I had a hire about a year and a half ago. A very, very impressive CV. Worked at all the best investment banks in the world, American banks, European banks, very experienced person in a sales position. He came up with TDX. He expected business to come to him. That didn't work, obviously. So people with the most impressive academic backgrounds or the most impressive career resumes may not be the right person. The right mindset is the key, just as important as the right skills. And this is tough, obviously, because as a founder, you're heavily involved in hiring every single person that joins the team. But if that person is underperforming, it's not right for the business, you have to cut losses quickly. Again, limited resources, limited financial resources, limited time. You really can't afford to wait and see. Obviously, you want to do everything in your power to help them to become a part of the business and contribute to the business. But recruitment, hiring human resources in a startup is also a bit of trial and error. You don't know how well someone will perform until they're in a job. You do your best to try and find the right people, but it doesn't always work out. So it's a difficult thing to do, but you have to cut loss quickly on your underperformers. And again, with so little resources, how do you attract the best staff? Obviously, we can't pay as much as Goldman Sachs. We can't pay as much as Deutsche Bank. How do we attract staff? So your incentives needs to be well balanced, that your lower fixed salary should be enough, obviously, for your staff to get by, but they need to be incentivized to contribute to the business. So for me, I believe in TDX as a business. I believe there's tremendous exponential upside in the valuation of the business. As you saw in the earlier slide, we went from 0 startup to $12 million valuation to $40 million. I see much, much more upside. So I want to incentivize my staff by giving them equity. So they have ownership in the business. They participate in our upside. So the staff members who joined me when we were valued at $12 million, their share options have already increased in value by more than 3 times. And I expect it. I'm obviously very bullish the industry as a whole. I'm very bullish our business. I expect that to continue to increase significantly. So we make up for the fact that we can't pay a high salary by incentivizing them with options, ownership in the company. Growth phase of the business. So once you've established a business that's making money, you've proven your concept, you've validated your business plan, you have a good, solid business that's making money, but how do you grow and scale up? This is the stage that we're at TDX. We're trying to grow and scale up the business. And you're faced with a very different set of challenges when you're in this phase of your business, trying to grow. Obviously, you need to expand the team and delegate your duties. This is very hard for me to do because I was heavily involved in every aspect of the business from day one. I have a very high standard in terms of expectations of every single function. But I have to let go. I have to trust my team to take over and trust that they will do a good job. If you don't delegate and you try to do everything yourself, it will be impossible for you to scale up. There's only so much that one person can do. So you need to find the right people, put them in the right positions, and trust them to manage the individual functions. Partnerships. It's the quickest way to grow. We can only find so many clients. How do we find the right partners to access different segments of clients? Clients that we otherwise may not have access to. It might be a different geographic segment. They might be servicing a different sector. We may not have the networks. So finding the right partners is very, very important and key to growing the business. But selection of your partners is also very important. Who do you want to work with? Does your partner share the same values in terms of how to do business? Do they share the same desire or same expectation in terms of standard? Because how your partners work, how your partners distribute your products will reflect on your own company. It's very important that we do proper due diligence when we onboard a new partner. Do we need to increase our product range? So for TDX, we have a very, very niche, very specialized business. We sell structured products and crypto, options, derivatives. Do we want to launch new products, expand the range to attract more clients? But you have to be very careful when you introduce a new product. Does it cannibalize your existing business? So if client A who's calorie trading one of our products, let's say they're doing a yield product, and they ask you, can you change the product? Give me something else. So we create a new product, but all you're doing is shifting your existing client from product A to product B. It doesn't grow your business. It may or may not be as profitable. So introducing a product, the question we always ask ourselves, will it attract new clients? Is there a demand for it? Is it consistent with the overall strategy of the business? And does it deviate too far from your core business? We've always said from day one, we're focused on derivative structured products. If all of a sudden I go and start selling NFTs, it's still within the domain of blockchain, crypto, and so on, but it is pretty far from a core business. It's not something I would do. Although as a founder, you're always pulled in different directions. There's a lot of buzzwords and themes, NFTs, metaverse, GameFi. You get pulled in different directions, and it's tempting to get involved in the latest fad or latest popular products. But if it's not consistent with our strategy, it takes away from your core business. We want to be seen as the market leader in derivatives, and that's what we do. That's what we're good at. If your clients want to look at NFTs, we'll find the right partners for them to do so, but we're not going to go to business. We're not going to the business ourselves. Do we expand cross-border, go overseas into other regions? Is it feasible? What are the risks? Currently, we're looking at working with a number of different partners in selling products to different regions. Obviously, our core market is Asia, very Asia-centric. A lot of our clients are Hong Kong-based, Singapore-based. We have some overseas clients, but we're looking at working with partners in Dubai, with partners in London, and potentially in other parts of Southeast Asia. But it's very important to resist the temptation to grow too fast, too quickly. We've seen this happen time and again in traditional markets. During a bull market, when companies make money, you hire too many people. You go into too many markets. You try to offer too many different products. As soon as the market turns and we go into a downturn, you run into a lot of problems. You have to downside, cut losses, you lose money. We saw that in the crypto industry in 2021. A lot of the big exchanges, very well-known platforms, they hired thousands of people across the board. And now that we're in crypto winter, most of these platforms had to cut most of their staff to reduce costs. So resist the temptation to grow too fast. Always do your market research and feasibility. If I go into a market, how much money am I going to make? How likely is it that I'm able to sell my product to this market? Who's going to help me sell it? Are there any problems in terms of regulatory compliance, licensing? I can't sell my products in the US because I need a license. I can't sell in China because it's illegal to do so. So do your studies, do your research before you expand. And this is the fun part, exit. How do you exit your business? You've built a business that's made money. You've scaled it up, so it's making even more money. What's your end game? what's your objective with this business? Do you want to run this business forever? Or do you want to exit the business? So you need to plan ahead in terms of your exit strategy. What are your potential exits? You want to exit at peak profitability. I know it sounds easy. No one knows when it's peak profitability. You always think you'll make more money next year than this year. But you need to plan ahead. Think about the market landscape. Are there more competitors coming? I know in our business, we're very niche, we're very new, we're an early player, we have an early mover advantage on most of our competitors. But we know that in 2-3 years' time, the big investment banks will come and do our business. The Goldmans of the world, Merrill Lynch, no longer Credit Suisse, the UBS, maybe, they'll look at doing our business. So we want to make sure what's our exit strategy when that happens. Can we compete with them when that happens? I'm pretty excited actually. When they do come into the market, I think we're going to be a fantastic buyout target. That's potentially one of our exit strategies. So what's your mode of exit? Do you want to list on the stock market, an IPO, or a trade sale? A takeover, bolt-on acquisition by a bigger firm, potentially. Or have you built a cash cow business that's generating stable, consistent cash flow that you're happy to keep running the business and collect the dividends? Obviously mindful of point one. Are there competitors coming in to eat part of your pie? If you miss the opportunity to exit, no one knows when's the right time, but you have to make a call. But if you do miss that optimal point of exit, very likely, if your industry, your business goes in decline, you will see a very rapid devaluation of your company. We've seen that in a lot of crypto businesses. The valuations went up very, very quickly in a vertical manner during the bull market. Company that makes no revenue can be valued at billions of dollars. Now, fraction of that, if it has any value at all. Probably, if you miss your chance, you may never be able to exit. So don't get emotionally attached to your business. It sounds cold, sounds easy, but it is very hard. I love TDX. It's my child. It's been my child for the last 4 years, more so than my family. I spend more time at TDX than I do with my family. And it's a big part of my life that I'm very proud of. But at the right time, I know I'll need to pull the trigger and hopefully find a good exit for myself and my team members and shareholders. Well, this happens. So in summary, building a startup versus a corporate career. It's not either or. Most people will go through a long career with big corporates before you get to the point of running a startup. But it is very different. And the biggest difference is the resources and support that you get. At Deutsche Bank, all I had to do was sit in front of my computer all day and make money for the bank. I didn't have to talk to anyone. I can go through a week at Deutsche Bank without talking to a single person. I just trade. As long as I make money, they're happy. If no one bothers me, I'm happy. Because we have so much support staff for technology, HR, operations. I have a tea lady that makes me coffee. Sorry, in a startup, you have none of that. You do everything yourself. When we're moving offices, we move offices many times. Co-working space to co-working space. I did the moving myself, carrying computers and monitors from one office to the next, installing computers, writing up HR, employment agreements, everything from the ground up is your responsibility. In a startup business, if something needs to be done and you don't do it, it won't be done. Very different. Another big difference is if you work for a big company, you're very specialized in what you do. You're a small part of a big machine. You're very specialized in trading. I was very specialized as a derivatives trader. You might be very specialized as a programmer. At a big hedge fund like Citadel or Millennium, if you're a quant portfolio manager, you're responsible for a very small part of the code. You don't get all the code. They don't want someone to have access to everything. So you're a small part of a big company. You're very specialized in what you do. In a startup, you do everything. So you wear multiple hats, you get exposed to different roles, you develop your skills across different roles, different areas. So it's good and bad, positives and negatives, pros and cons. Income stability. If I told you you can go and work at Deutsche Bank and make $200,000 a year for the next 5 years, or you can start up business like TDX, in 5 years' time, you might have zero or $50 million. Which one would you choose? And the probability of getting to $50 million is probably 5% or less. So stability of income. As I mentioned, when I was in early stages of TDX, I didn't pay myself. I had no salary. I had to give up my stable income to run a business. To run a business that you believe in. You have to believe in it in order to do that. Risk reward. The risk is you spend all this effort, you spend all this time on this business, it may still fail. Most startups fail. So that's the risk, that you spend 5 to 7 years of your life building something, but it may not work. That's the risk that you face, that everyone faces when you build a startup company. But there's a huge sense of ownership. You own the business. You drive this direction. You're in charge. And if it does work out, there is a huge sense of achievement, a sense of fulfillment, and hopefully a lot of money as well, but that comes later. So that's what concludes the part about my sharing in terms of a startup. I'm not sure if you want to have any questions in terms of startup, my experience at TDX, tips, hints. Yes.
I would say that, like, most people, I don't want to generalize, but most people, like, would prefer go to the left path, right? Everybody wants to, like, be billionaire, make money, or take risks. But my question is, like, what makes you different from 9 out of 10 that fail out of the left path and have to finally go to the right path? What makes you different? Would you say it's like, do you have anything different from them? Maybe like family support, family money, or someone back up you, or maybe would you say your luck to stay in the right time and right place?
I wish I had the first one, a wealthy family to back me up. No. Luck comes into it a lot. For a lot of businesses, you need luck, and you need a lot of things you need all the stars to be aligned for the business to work. And I'm not saying that we've made it. We're still a long way away from making it. We have a business that operates, we're a business that generates revenue, but we're a long way away from being where we want to be. But how we got to this point is, there's a lot of factors. I think timing is one. Finding the right market gap, defining the right opportunity, seeing the gap in the market. So we saw a huge gap in the market that no one was offering wealth management solutions on crypto to professional investors in the region and elsewhere. We were too early. Most investors we spoke to in 2019 told us to go away, told us we're crazy doing derivatives on crypto. But we stuck to it. We believed it. We believe in the business. We knew that, well, I knew sooner or later that given the logical evolution of financial markets, crypto as a new asset class will evolve like equities, like stocks, like FX. And in traditional markets, derivatives is a huge marketplace, much bigger than multiples of the spot market. There's demand for derivatives from family offices, private investors, demand from institutions. For an asset class to operate in an orderly manner, you need a derivatives market for institutions to hedge their risks. So we knew it was going to happen sooner or later. We just didn't know when. So we had to make sure that we can last long enough, survive for long enough, that we can capture the wave. So obviously that involves a lot of planning in terms of minimizing the cost. Now, we had a very strong backer in the family office who seeded the business. We had a good group of founding shareholders who believe in the business like I did. So they were happy for us to progress, even though we were not making money in the first year. We started doing business in the second year. It was very, very slow, but they could see progress. They could see the clarity in terms of our planning, the clarity of our vision in terms of what we're trying to achieve. So sticking to it, believe in the business, and a lot of luck. The timing was, we were 2 years too early, but it turns out being 2 years too early made sure that we were ready when the bull market came in late 2020 and early 2021. We were able to capture all of those flows. So yes, hard work, believe, good support from your shareholders, and luck.
So you mentioned crypto winter. So what happened during crypto winter?
A lot happened during crypto winter. One of my slides. So this is some of the events that happened last year in crypto. If you follow crypto markets, you would have saw a lot of headlines. Some very, very big companies failed. It started off with a coin called Terra Luna. They had a stable coin called UST. That depegged, a lot of people lost money. And that triggered a chain reaction throughout the entire industry. Celsius Network is a company. Who's heard of Celsius Network? People in crypto would have, but if you haven't heard of Celsius Network, they're like a crypto bank. Crypto investors can deposit their crypto with Celsius and earn interest. And Celsius will lend out their crypto to other borrowers and make an interest. So they're very much a crypto bank. They had about $20 billion of assets, and they collapsed. They went bankrupt. It's huge. And then 3 Arrows, one of the biggest hedge funds in the crypto space, went bankrupt as well. And then in November, FTX, the second biggest crypto exchange globally, went bankrupt as well. So crypto winter, what can I say? Risk management, we spend a lot of time on risk management. So it would have been very easy for a crypto trading platform to have been tempted to deposit client money with, say, Celsius and high rate of return, lend money to 3 Arrows at 8 or 9%, and so on. But the key for us was discipline, risk management, counterparty risk. We didn't take on counterparty risk that we weren't comfortable with. So fortunately for us, we were able to avoid a lot of these blow-ups. So we didn't lose financially, we're perfectly fine. We didn't lose money from these platform failures. So that's one. But secondly, it became very difficult to generate new business because sentiment towards crypto last year was terrible. Whether if you're in the industry, you saw the biggest platforms collapsing. If you're outside of the industry, all you saw were headlines about fraud and so on. So sentiment was bad. Business was very volatile. We had a very up and down year. There were periods of positivity when sentiment picked up, and there were low periods when clients just didn't want to do anything, didn't want to hear the word crypto. So it comes back to containing your costs, maintaining your core business. What worked in our favor was the fact that we had been around for a period of time. So 3 years in traditional business is a short period of time. In crypto is a lifetime. So we've been through a lot of ups and downs, March 2020, May 2021, and we survived. So existing clients trust us. So we had a stable business from existing clients that helped us to generate cash flows while it was difficult to generate new business. But for us, it was about being very consistent with the message of crypto. Our belief in crypto hasn't changed. What I wanted to talk about very briefly is the failures that happened in the crypto space, Celsius, FTX, 3 Arrows, they were not specific to crypto. It's not a problem with crypto. It's not a problem with blockchain technology. It's all the same problems that led to the collapse of Lehman Brothers and Madoff. It was poor risk management, excessive leverage, and fraud. So it wasn't a crypto specific problem. And we continue to speak to clients about crypto and why they should consider continue to allocate in crypto, because we believe in it as an asset class. And I think that's sort of worked in our favor now that the market has started to turn post the bank failures in the US and Credit Suisse. We've had a huge rally in Bitcoin. And I think clients are appreciative of the fact that we've been consistent in our message. Now that hasn't changed. And we're seeing flows coming back now.
We have a couple of questions online. Those are general questions for Dickie. For someone that doesn't have a finance background, like any suggestion for someone like that to get into crypto, for example, what books you would recommend them to read or what media channel they should follow, such?
I would highly recommend following my Medium channel.
Go check it right now. Yes.
No, I think the problem with crypto, or one of the challenges with crypto, is that the market is so fragmented. If you're looking at stocks, you can go to Bloomberg, you can go to Reuters. There are a lot of readily available sources of information to do research on the traditional markets. In crypto, it's so fragmented. You have thousands of exchanges, thousands of platforms, and tens of thousands of coins. So there is I wouldn't say there is a one sort of single source of reliable information. Twitter is fantastic. There's so much information on crypto Twitter. Obviously, you need to follow the right people. There's a lot of really good analysis in terms of what's going on in the market, latest developments, regulation. There are also a lot of scams on Twitter, so you've got to be very careful. You have to follow the right people. But social media has been one of the best sources of information in the last 18 months. A lot of industry players were able to work out something was wrong at FTX by analyzing tweets from certain people. We got very concerned about Celsius from social media. So it's a great source of information if you filter for the right people. And please follow my Medium. I do write a weekly blog in terms of market color analysis.
There's a second question. Actually, is a potential customer alert for you. Basically, you're saying you're talking about structured products and how to launch products. How do customers actually make money on TDX strategies, the platform? Like, if they were a customer, how?
That's a great question. What we aim to do at TDX Strategies is to give clients the tools with which they can use to get their desired exposure to crypto. So we're not here to tell you what to buy. We'll kind of give you some ideas in terms of what we think is happening in the markets, what you might want to consider, but we're giving you the tools for you to achieve your objectives, your investment objectives. So most people right now, most of our clients, they want to accumulate Bitcoin as a store of value. They worry about banks, with 3 big banks in the US going down. Credit Suisse, a prestigious financial institution, 150 years going down. Most clients are looking to accumulate Bitcoin as the store of value, the safest store of value. But most clients don't want to buy at the current market price. That's sort of the investor mentality. The current price is always too expensive. Doesn't matter if it's at $28,000 or $20,000. The current price is always too expensive. I want to buy cheaper. So with structured products, we give you the potential to buy the Bitcoin or Ether at a discount to the current price. So if your target is to buy Bitcoin at $24,000, we'll structure you a product that will give you the potential to buy the coin at your desired price if certain conditions are met. And if it doesn't get there, you make yield. So our most simple product, I wasn't going to turn this into a sales pitch, but I do have a slide. Just an example. If clients want to buy Bitcoin at $21,000, if it doesn't get down to $21,000 in a period of 25 days, you make a 17.5% annualized return on your of interest. So worst case scenario, you put in $100,000, you get some interest. But if at expiry in 25 days time, the price of Bitcoin is below $21,000, you will buy Bitcoin $21,000. So the product gives you a very high degree of certainty in 10, 20, 30 days time, you will either receive interest on your investment or you will receive Bitcoin at the price you want to buy. So clients, can they make money from this? Absolutely. Depends on your timing, of course. I mean, last year we had a lot of clients who continued to buy Bitcoin all on the way down when it started going from 30,000 to 25 to 20 to 16. They bought at every level. So at the end of last year, when the price was still at 17,000, they were sitting on a paper loss. But now we're back up $28,000. They're now making money. So the objective of TDX is to give you the tools to acquire your desired investment. And when you make money, clients can make money, and we can make money. We're not taking a bet against the client. The business model is it's a win-win business model.
Any other questions from the floor? All right, I guess I'll just take the liberty to ask the last question to Diggy. How the global regulations, or how has it been shaping the landscape of the crypto industry, and what do you think about in the near future what will happen?
It's a good question. Crypto has always been known as the wild, wild west of the investment world, where everybody can do whatever they like. You know, the second biggest exchange can steal $10 billion of client funds and send it to his hedge fund. It can only happen in crypto because it wasn't regulated, because it's not regulated. So I think it's important for the industry to have rules in place, supervision, and regulation. And only when you have regulation can true institutional adoption take place. Now, the big institutional investors, they're not going to invest in crypto if it's not regulated, if they don't have the confidence that it's safe. So regulation is important. And we're seeing that happening across the globe. In Hong Kong, Hong Kong just changed their stance towards crypto about 6 months ago. The regulator, the government, is very, very supportive of digital assets. So there's a change going on in terms of the regulatory landscape. The SFC is in consultation with industry players. Obviously, Alex is heavily involved in that process. I mean, regulation, it's important that regulation doesn't go too far. In the US, we're seeing a bit of a crackdown. It's very political in terms of crypto regulation. And when you do that, you just push crypto players to a more friendly jurisdiction, like Hong Kong, like Dubai, like Singapore. So the whole industry is heading in the right direction. Regulators around the globe are working on a framework to regulate and supervise this industry. It's a fine balance between regulation and not being able to do business. So that's going to be the challenge for the regulators, to find that right balance. But I'm very optimistic. I think in the years down the track, if we have a very proper licensing framework in Hong Kong, the business will prosper. Big investors will be more comfortable allocating large amounts of assets to an industry if it's regulated versus one that's unregulated. A lot of our clients are ultra high net worths with a lot of money, with a lot of zeros on their bank balances, but they're only prepared to allocate a small amount to crypto because they want to have exposure, but they're not so comfortable with exposure in unregulated space. So when there's clarity in terms of regulation, we'll see the wallet size, allocation, and investments increase exponentially. So I'm very bullish in terms of regulation and what it does to our industry.
Sure, yeah, go ahead.
I'm just putting up my Telegram if you want to. I'm happy to continue the conversation. Thank you.
Sure. So thank you very much for people online on Zoom. Once again, we'd like to ask for a round of applause for Mr. Dick Low, co-founder and CEO of TDX Strategies. Thanks for sharing. It's really insightful, deep sharing of an entrepreneurship journey and also the prospects of a fintech company. So I hope all of us have learned a lot today. And if you have further questions, feel free to pass it to HKDAS, and we'll ask Dick for an answer and get back to you. And I was made aware that I did not introduce myself, so I'm an executive committee member of Hong Kong Digital Asset Society. My name is Jason Lau, and we're a community. So I'd like to ask you guys to join us if you haven't already, and you gain a lot from the networking or the knowledge, or we host sessions like this today. Invite experienced speakers to speak to us, and we've organized so far the past 2 years the biggest Web3 hackathon in Hong Kong. Actually, it might be in the region as well. So we'll have it again next year, and we encourage all the students or anyone to participate and try to get in with their huge prizes for that. Now, once again, give a round of applause to Mr. Dick Low. Thank you. Until next time. Bye.